In this video, traders, we're going to look at what's more important, a diagonal trend line or a horizontal support and resistance line. Stay tuned. Hey traders, warm welcome to you. Alright, so which is more important? A diagonal trend line, which is keeping trend in check, either a channel, either a bottom trend line, upper trend line, or both in the case of a channel, or we're talking about support and resistance lines, which is more important out of those two, especially when you're trading Forex. So when you're trading Forex, you could argue the charts are slightly different because of the 24-hour nature to it. You don't get the burst of kind of volume that comes in. Yes, there's a volume increase, granted, when the actual underlying market opens of the currency. So FTSE opens, GBP is going to get more active. Dow opens, S&P 500, Nasdaq opens, USD will get more active, Nikkei, Yen, etc. Granted. However, if you're looking at something like a FTSE 100 futures chart or a DAX futures chart or a Dow futures chart, generally speaking, the extremes of volume are more significant. So the argument is, and it's kind of what we're going with at the moment, is that the Forex charts are slightly different when you're kind of putting things like key levels on, trend lines, support lines, resistance lines, especially with the trend lines, not so much the other stuff, but especially trend lines. So question is, which is more important, the trend line or the horizontal line? Let's go to the screen and look at Euro US dollar on a few time frames and answer that question. Alright, so I've got the Euro US dollar chart here, and actually it's quite a good time to be doing it because we've got some little bit of a trends going on here. So let's draw our trend lines. Looks like we've got one here. I would happily draw that one there, and I would also happily draw a channel pretty much there. So that looks pretty good, and we're kind of sticking to it at the moment. Actually, as I do this, we've broken out of it and kind of flagging at highs here. And this is a daily chart, by the way, guys. Okay, now compare that to something like a horizontal line. Let's just shift this volume off for a moment so we're a bit cleaner because the line's going to be down the bottom here. So horizontal line, I think we probably all agree that if we were looking at this chart like here, then we would probably, where's my line gone? We'd probably be, I think I've got it coloured in white because of my black screen. Let's normally have a black background. Let's click it red. I think we'd agree that's probably about right. There's got a low there, yeah, a little dip under. That's probably a good level of support, and we can probably thicken that up a bit just to really give it a bit of weight because it is such a decent level of support. Okay, so let's have a look at these two examples, and we'll look at some more in a moment. So price is really, if you look at it and you just look at it and forget about the trend for now, and you just look and see how price has responded, this low has held very strongly, and there's no doubt, no one can argue that is not a decent support level. It actually goes back way beyond here, and you can see how it's been in play from a long time before, but there's no doubt that's a decent support level. So if you're framing your trade around that, you're actually not doing too bad. Now, this is where it gets interesting because we start to kind of break a little bit lower, still not quite cleanly, use it as resistance, and it does a couple of months under there, it comes back up, resistance now broken back above. So this becomes key not only during this time period and also when it's broken here, because when you're at this point here, it's gone, right? You've forgotten about it almost. You're like, well, if it pulls back to it, maybe it's a short, but at the moment, I'm not interested. I'm looking at fresh territory down here. However, when it comes back to it, now it's adhered to it. Now, the argument is, okay, is this more powerful than this solid line? For me, it's not. For me, this horizontal line here is what's causing this price to stall as opposed to this trend line. And let me tell you why. Because these trend lines generally are going to be so subjective that it's hard to really feel confident to pull the trigger when it hits one. Now, I'm not saying that you wouldn't use it as a guide, and I'm not saying that people don't. I know that a lot of people use trend lines very, very effectively to guide their trade. But for me, to pull the trigger when we've come back to a trend line that's only had a few touches isn't as compelling as it is to come back to a level that I know is a level that's not dynamic, it's static, like a trend line is dynamic, that everybody is watching, whatever time frame they're on. Even though you're looking at a chart, it might be someone hedging, might be something this, but there's a level, it's a key level that everyone's got and it has been before, so it's more likely for me that it's going to work. That's the difference between the trend line and the horizontal line. The dynamic nature of the trend line means the numbers change changing all the time. The static nature of the horizontal line means that number's there, it's not moving. Let's go back to the screen and have another look. So, and also the problem I have with trend lines being, the argument for trend lines being as useful as horizontal lines is that it's very arbitrary as the way you would draw this. Now, we've got a benefit of hindsight here with this. So let's go back to here and say we didn't have the benefit of hindsight. Would we want to draw the line using that high? You know, we might want to draw the line using that high and have it like this and say, well, then we go, well, is it the peak? Is it the very, very top tick we should be taking? Is it the cluster? I mean, I'm a fan of clusters because I think that a top tick means nothing, whereas a little bit of a cluster means a little bit more sense. So for me, I'd be drawing that here. If I was looking at the trend line, let's just remove this bottom one here. If I was looking at it from that perspective, that's how I'd be drawing it. I'd be looking more of a triangle. And then we see, well, actually, then that becomes irrelevant there. So just by the way I've changed the way I draw it means that the trend line's different. Now, we can come back here and go, well, even if I didn't use that, let's say I was using this one and I had this and I extrapolated it out. Again, what do I do it? Do I do it on peaks? If I do it on peaks, then we're a little bit below that. Do I do it on clusters? If I did it on clusters, maybe I'd have it here. If I did it on highs. So you see how much difference that makes to the overall chart. What if I want to bring that one in as well? Then do I have the cluster of that one and that one? Do I kind of do this and make it fit well, in which case that fits nicely? So you see the point. For me, trend lines are nowhere near as powerful. Trend lines are useful as a guide to give you an idea on the rotation side. So for example, with this one, let's copy this, clone it, sorry. You can see that and approximations then do work. You know, we can say, okay, right, well, we've rotated from the bottom of the trend line to the top, bottom of the trend line to the top. Those excursions are similar. Yes, there's more to the downside in this case, because it's a downsloping trend line and we've come further. But then we can kind of frame it. This is why I think trend lines a little bit can be useful, is it frames the kind of market conditions. Whereas the support and resistance to me is a different thing altogether. It's basically saying this is a key level, this is where we had buyers or sellers before, and we're expecting it to repeat itself. The trend line is a different message. The trend line isn't saying this is a level, it's saying this is the kind of distance from high to low, from low to high that we've reversed at before. Maybe it's time to consider taking profits. Maybe it's time to look for something else at a turning point. Two distinct different signals, in my opinion. Let me know your thoughts in the comment section below on this one, guys. But I do think that's the power of the trend lines, is that it frames the kind of waves, if you like, the ocean, the tide of the market. Whereas a support and a resistance line is irrelevant with that. It's okay, this is where potentially supply and demand could shift, potentially a place that I want to do business. All right, guys, take care. See you next one. Comments in the comment section below. Take care. Bye-bye.